What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I want to talk about some very, very key levels to watch for, what Jerome Powell said that caused the market to explode, and what you should be watching for as time goes on. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total, not to mention 8.1% APY in uninvested cash. The offer ends at the end of March. Anyways, let's talk about what's happening so far. So looking at the markets, I mentioned to everyone we had a possible inverse hand shoulder-like structure that was developing, and that's if Jerome Powell tried to say certain things, it could cause the market to pump. If not, it could have also caused us to dump, but instead we didn't really see that. So what's happening so far? Let's talk about this. The market saw a small pop, then it ended up dipping, and we saw a lot of consolidation today as the market ended up opening. But then we got this data that caused a big shift. So the first thing is, amidst the uncertainty associated with the tariffs, there's lots of uncertainty about what's going to happen with inflation, all these pieces of data. The Fed have made the announcement and the decision to keep rates the same, to not change them thus far. So that's very, very important news. The Fed is keeping them the same. And then what happened was we got the FOMC economic projections, and this is what caused the market to pump. So for 1 year out, the Fed announced that before they thought that the Fed funds future rate would be at 3.9%. Now they think it's going to be at 3.4%, which implies in 1 year they may be seeing more cuts than previously expected. For 2 years out, they're expecting 3.1% targets. That is below the 3.4% previous target, implying that there could be another extra cut for 2 years out. Now, the current projections are basically this a little bit lower than before, but the longer term projection is going to be the same. So that's what the Fed is telling us. Why are they saying this? It's because the long term projections for inflation remain relatively decent. If you actually look at this right here, where the change in real GDP, if you look at the next couple of years, they do see a small contraction, but they're saying it's not going to be too terrible. They also mentioned that the unemployment rate may actually go up a little bit, give or take by some standard deviations. There could be a slight increase in unemployment. They did account for that, but they remain optimistic because they think that eventually the long-term target for inflation, especially on the PCE side of things, is likely going to hit the 2% target within 2 years. That is, once again, some good news. And then the Fed is once again going to likely cut a little bit more than previously expected. So what did Jerome Powell say? Let's talk about this. I have my transcript right here about everything he said. I'm going to actually summarize a lot of his points. He said the same things he always says in the very beginning. He mentioned that the Fed made the technical decision to slow the pace of the decline of their balance sheet, and they're going to keep rates the same for now. Then he went on about how the labor market is not a source of inflationary pressures, and that PCE, despite the fact that it rose a little bit in December, it's making progress for the later months. He said the long-term inflationary expectations are consistent with the 2% goal, but the expectations for the short term have gone up because of tariffs being a driving factor. Then he said that we are not in a hurry to cut. We just need to wait for better clarity. Then he said there's a lot of uncertainty about the policy changes and the economic effects, and that once again, the new administration has policy changes. So he continued to say that over and over again. And then on top of this, he mentioned that there's going to be an increased tightness in the money markets. He went on to say the same things about how goods inflation did go up, but clearly tariffs are going to be a part of it. But it's difficult to know how much inflation will come from the tariffs, so they're going to be uncertain and just kind of wait it out. He also mentioned that there could be a slight delay in further inflationary progress this year. However, they don't know the exact details because we just have to wait and see what happens. And then he went on about the same things over again. Let's just see this again. It's the same thing he just kept repeating over and over again about how there could be an increase in layoffs, but it would probably translate quickly into unemployment, but it's going to be okay because he anticipates it's not going to be too bad. And then he went on about how he thinks that we could trust their forecasts and that the Fed needs to see direct evidence to make a claim. So the Fed is not going to say, oh, the recession's coming, this and that. You guys have to panic. They're not going to say that at all. When asked about a recession, Jerome Powell said the same thing about how, the Fed has made a lot of progress at bringing down inflation without causing much economic uncertainty and lots of destruction to the economy. They've avoided that. And as a result, he remains optimistic. So he still has a very optimistic view. And then he went on saying the same thing over and over again. We have to wait and see what the data tells us. We have to wait and see. He is open to the possibility of higher inflation due to the tariffs, possible increase in unemployment. He's open to those possibilities. But despite that, he remains optimistic. So why did the market pump? Because the Fed is anticipating more cuts for the next couple of years than previously anticipated. But a lot of what Jerome Powell said, in my opinion, was not that great because, once again, he is telling us there's going to be another increase in inflation, and there's just so much uncertainty about that. So without giving us objective numbers, without trying to incite fear, he started to say that inflation is going to be transitory. It's going to likely be a very transitory change, and that the Fed's long-term targets are going to be completely fine. So he continued to say the same things. He also continued to say he did not want to comment on a lot of questions about economic policy. So, because a lot of it has to do with like politics, and there's only so much he could say until we see the data. And he kept saying the Fed has to wait for the data to see. They have to wait and see what happens. So he's very, very uncertain. So, in my view, some things he said were not good for the economy, such as the fact that there's going to be another increase in inflation and the labor market is going to see contractions. However, despite that, despite the tightness coming, he did not say anything about a recession. In fact, he implied that the Fed is capable of avoiding one. But then he just kept saying it depends on the data. But because of the fact that the longer term inflationary expectations look solid, according to the Fed, I know that they don't truly know. They can't make promises. They're just kind of like keeping people calm. This is what happened many, many times in history. But because of the fact that he remains uncertain and because of the fact that he has a positive outlook for the long term, we saw the market still hold up very, very nicely so far. So that's the main thing, at least thus far. He did continue to say, this is one of the most important quotes: uncertainty around the economic outlook has increased, according to Jerome Powell. So he kept saying that over and over again. And for me, I just think that the long term looks decent according to the Fed, but the short term does have some pain that could be coming with higher inflation and such. The market was still optimistic despite that. It's almost as if the market wanted to run and just ran anyways. So that's something that's worth mentioning. So what did Jerome Powell say? Was he dovish? Was he more hawkish? He was uncertain. I think that's the best way to put it. He was trying very hard not to crash things, not to cause lots of disruptions here and there. He was being very careful with his words, and as a result, he helped the market push for now. Now, on top of this, there's more news involving President Trump, Zelensky, and Putin. So, President Trump spoke with Putin yesterday. Today, he spoke with Zelensky, saying they had a very, very good conversation. As a result, they're still negotiating a ceasefire deal for 30 days. There's a lot of things that are being demanded by Russia, and we'll see how it goes. If there's any kind of news that comes out that the ceasefire is complete and they both agree to it, that's going to be big for the market. I think the stock market is going to explode if that happens. We'll see, just to be safe. And then President Trump also said something very important. So he started to talk about April April 2nd. He said April 2nd is going to be a liberating day for our country. He is not really talking too much about tariffs right now. He's more focused on the ceasefire deal and other things. But he is continuing to hype up April 2nd, saying there's going to be big tariffs coming. So get ready. They're going to be reciprocal tariffs. And he believes it's going to be right for the country. So we'll see how that goes. So that's what's making up the news right now. The market's extremely fearful for the time being. Momentum is at extreme fear, and the other indicators, such as like the put to call option ratio, is at extreme fear. Volatility is decreasing, and we're just still seeing a lot of fear that's there. But the market's still trying to bounce despite that. And finally, two more things. We have some earnings coming out tomorrow. We have Nike and FedEx, and we have NEO on Friday. And then lastly, for tomorrow, it's going to be Thursday. Just keep in mind we have initial jobless claims in the morning, then a bunch of bill auctions. But that's pretty much it, guys. There's nothing too crazy for tomorrow in terms of data, but the market will still be reacting to Jerome Powell. Why is that? Because when Jerome Powell speaks, when we have FOMC meetings, the reactions could be all happening in one day. Sometimes it takes 2 days. Sometimes you see the market continue to react the next day. And I think there's a very good chance we see that. So let's now just focus on the charts. I know Jerome Powell was saying a lot of ambiguous things, and he led to lots of uncertainty. But despite that, the market is still trying to pump. So the first thing you're going to notice about SPY is the fact that we have a possible inverse head and shoulders like pattern. We have like a left shoulder here. We have a potential head. Then we could be forming like a right shoulder. If we're bullish, you want to see us hold above 568 to 569. Actually, it's 568.96 to be precise. That's basically 569. If we break and hold that close above that, I think we would rally for 575. That's the more bullish case or above. So keep that in mind. However, If we're bearish, okay, let's just say, for example, the uncertainty that Jerome Powell talked about had a bearish interpretation. And because of the fact there's going to be a risk of higher inflation for the short term with the tariffs, let's just say the market tries to dump, just hypothetically, right? You have a slight bearish divergence that could be developing, but it's not confirmed yet. And if we end up losing this low here around 559, I would be looking for a reversal back down to 555 or below. So it could go either way if we lose support or not, okay? That's the bearish case. What do I think is going to happen? My personal opinion is, like, once again, I can't always predict exactly what the market will do because of Jerome Powell, but I do think that there's a good chance that we try to continue, because look at this trend right here, right? Before, the market had a high, made a lower high, a lower low, lower high, and another lower low. So we were making lower highs and lower lows right over here. As of recent, it's looking like SPY tried to break structure. So we broke this high here. We came down, made a higher low. Now we're trying to make higher highs and higher lows like this for a temporary reversal. So that's the first signal that suggests we're going to go higher. The second thing is we have an inverse head and shoulders like pattern. And the third thing is the fact that on the daily chart, we look a little bit more bullish. We need to break past the 200 EMA around 569 though. If that breaks, then I'm looking for essentially 575. So what do I think is going to happen? What is my prediction? The answer is I think that the chart looks a little bit more bullish. I'm 60% more bullish and 40% more bearish. For now, I think we temporarily do see a little bit more upside from here because of this inverse head and shoulders and all the confluences. So there's a good chance that we attempt a move like this. Maybe we dip a little bit in the morning, then we just start pushing, breaking all above 569 tomorrow. As long as that holds or closes above that, I think we go for 575. Looks a little bit more probable, but we'll see just to be safe. So watch for confirmation. Can't make promises. It depends on the true reaction, but that's what I think is very likely. On the QQQ, the bearish case is the same thing. If we end up losing this low here, if we lose 472, I do think we're going to be dipping back down to the 468 or below area. That would be the bearish case if we end up losing 472. That would be a very, very bad sign for us to start dumping. But if we hold above 485, that's going to be our 50 EMA. If we hold above that, then we have this. This is kind of like a double bottom, also like a slanted inverse head and shoulders, which would suggest that a break of 485 takes us all the way up to about the 490s. 492, for example, would be a very, very good target. So, in my opinion, I think that if you consider the fact that we formed a base here, we formed a double bottom base, and then we're trying to form a higher low here. If we continue to make higher lows tomorrow, I do think we're going to continue like this and try to go even higher for that 492 target. So I think it's a little bit more likely we try to go for that imbalance fill. We try to push for 492, looking at the 4-hour and also on the daily time frame. The QQQ does have a lot of potential, but I need to see us break 485 to push towards the 490s to 492 range. So please, let's wait and see just for confirmation. I think the odds do favor upside ultimately, at least for now. On the Russell 2000, the same thing, right? We used to be making lower highs and lower lows. We had this high here. We came down, made a lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? But this time, we're forming an accumulation. The daily looks stronger, and we're back above our 50 EMA, which is a good sign. Can we hold above 205? If that's the case, this is going to be bullish. If not, it's going to be a bad sign. But if you look at like the daily chart, for example, it's looking like it wants to go up to 208. If that breaks, we're looking for the 210s. And when you go back to like our 4-hour time frame, I think this is looking quite good as well. So we have a potential accumulation structure right here. This is forming like a nice inverse head and shoulders, and this may continue to uptrend back up for the 210s as long as we're above 205. So this looks a bit more bullish to me, especially as we're trying to make higher lows here. I think that's a good sign so far. On ES, we look a little bit more bullish, especially as we have this inverse head and shoulders. As long as we don't end up losing like 57.14, we're favoring a push for essentially 57.50, eventually the gap fill for 5800. However, if we lose 56.50, we're looking for a dump back down towards 5600. So keep those levels in mind. In my opinion, I think that we have like a left shoulder, a head, and then maybe like a right shoulder forming. And that could be, once again, favoring a move back up towards 5800. So I think that we look bullish on ES with this inverse head and shoulders as we're trying to form an accumulation. But we'll just have to see how things end up going from here. So keep that in mind as time goes on. That's going to be very, very important for us. For other factors out there, we have NQ. NQ is also looking decent. We also have this like double bottom that's forming. So with that being said, let me just say that we have a potential left shoulder. This could be like our head, like a double bottom head, and this could be like a right shoulder, and then that could be forming a very, very slanted looking structure that's quite good. But I need to see us hold above at least 19,600. If we hold above that, I'm sorry, 20,000. Sorry, guys, I want to correct myself. We have to hold above 20,000. If 20,000 breaks and holds, so we're looking for an attempt to get back up to 20,400. If we lose 19,600, I meant to say that, guys. If 19,600 is failing us, then we're going to turn back down. So as long as we're above this support, we're looking good. If 19,600 fails us, though, we will be dipping to these lows. So as long as we don't end up rejecting and lose this low here, it's going to be bearish, forming a double top, and it's going to be looking kind of bad. But as long as we hold above this low, make a higher low, and just continue, we're going to be looking for the 20,000s. 20,500 would likely be coming. I do favor upside a little bit more. For Bitcoin, we're looking good. We're actually making higher lows right here. I would like to see us hold up, so I think this may continue to uptrend for that 88,000 area. If we lose 85,000 flat, though, we could be dumping back down, so we'll see about that. But for now, I am favoring 88,000. So it's now showing a lot of resilience. So far, so good. Notice on Nvda, we also happen to have kind of like an inverse head and shoulders, right? We have a left shoulder here, we have a head, then we have a right shoulder forming. However, I want to see us hold 117.8. If that holds, I think we easily push for 123. If we lose this support at 114, we're going to be dipping back down to fill this gap. So it's going to be a bad sign. We got to hold 114. We had the very important conference where they announced their new chip, but we need to see if this could continue despite that. So, in my opinion, we have a good catalyst. We have potential. I would like to see us hold above 117.8 and 120. Then we're looking for essentially 125. If we lose 114, we could dip back down, but I think this is looking a little bit more bullish. We're favoring upside a little bit more. For Tsla, I would just argue that we have a interesting structure. I just want to see us hold above 237. If that's the case, we're looking for an attempt to retest this trend line for 244. Then we'll see if we turn back down from there. It depends, guys, on how Tsla reacts to that. We need to get back above 250 to remain bullish. Could it be that Tesla's trying to make a higher low here? I mean, this is very ambiguous. It's very tricky because is this a low here? Could this be like a higher low, then we break out higher? Like, it all depends on what we end up breaking. To be really bullish, you want to break out and hold above 250. To be bearish, you want to see us lose this low over here. It's the same thing. If this low fails us at 225, if 230 fails us, look for a retest of the low, and then this could be dumping. But I am favoring it's going to try to go back up towards this trend line, back up to about 244, and then we'll see if it rejects or not. Tries to break out like that. So watch that very closely. For Apple, I think we're looking bullish. We're looking for 215.47 as our support. If that holds, we're going to continue to push for 218. If this fails us, we could be dipping back down for basically 213. So we're making higher lows here. I think we may continue to push for that 218 target. Please keep that in mind. For Netflix, we're looking bullish as we're making higher lows. We got an exact bounce as I talked about yesterday. And then what else is interesting is that you have an imbalance over here around this 980 to 1000 area. So I wouldn't be surprised if we just continue to uptrend like this for now, back up to about 980 to 1000. There's a very, very good chance we try that. If we end up losing 934, we could turn back down, but I'm not really favoring that. I think we still look quite good. For MSTR and MicroStrategy, I think we're looking quite good as well. We have a nice double bottom like structure, so it's looking quite decent as it's trying to hold there. We want to see us get back above like 325, so I think there's a good chance we try to visit up there. Might dip right here, then try to continue to push for 325. For Celsius, we have a very, very nice looking accumulation structure. I would like to see this continue to push for that 34 target. If we lose 29.5, it's going to be a bad sign, but I think there's a good chance we try to continue. We may just continue to uptrend for the 34s, back up towards these highs up here. Why is that? Because we're forming a nice looking, this is like an inverse head and shoulders again, right? We see these all the time. Nice reversal structure. Supermicro is looking decent. I want to see it break 40.8. If that breaks, I think I see 42.8 next. As long as we don't lose this yellow line here, we're bullish, right? It's bullish. It's going to likely continue to uptrend like this to make higher highs and higher lows like that. For Palantir, we're looking bullish. I think there's a good chance that we try to see an inverse head and shoulders. If we break this resistance right here on the 89 area, we're looking for an attempt to get back up to 92. If we end up losing the low right here, we could be turning back down to fill the gap at 80. We still look more bullish. Rivian's looking more bullish as long as we don't lose 11.25. We're favoring a push for 12. If we lose 11.14, we could turn back down. I think this is favoring upside. SoFi is looking bullish as we're trying to make higher lows. As long as we don't lose 12.5, we're looking for an attempt to push for 13. I think there's a good chance we try to get up here, so watch that very, very closely. For AMD, We have a double bottom. It's actually breaking out right now. As long as it does not lose 104, I think we continue. As long as 105 doesn't fail us, I think we continue to push for 108. And if that breaks, 111 is coming, so it has potential. ARM is in the middle, not looking as strong. I think they had some negative news that came out, but despite that, as long as 115 holds, it could try to bounce. There might be a small dip coming though. Coinbase looks bullish. We could be on our way for about 197 to 200. We have a gap to fill up to the 212s. Look for 197 to be tested. If that breaks, we're going to be bullish. I think we might try to push towards that. Amazon is okay. We're in our range. We like to bounce near 190. We like to reject near 200. So I might try to push for this imbalance towards 198 to 200. We'll see if you reject or not. Meta is technically on a downtrend, but we want to see if this bullish divergence pans out. So let's see if we break 595. If that breaks, we're looking for an attempt for 602. For Microsoft, we have a nice looking bullish divergence. If we could break past 388, we're looking for an attempt for 392. If we end up losing 385, we're looking for a dip back down for 382. So I see some upside potential. For Google, I want to see us break 169. If that breaks, we're looking for an attempt for 172.5. If we end up losing 164, we're looking for a dip back down. So we'll just have to see how it goes, especially as we have a bullish divergence. But we need confirmation. Break 169, then we're bullish. We'll see about that. I do think we test that tomorrow, and we'll see if you reject. For others out there, we have stocks like GameStop, a little bit more bullish, looking for a 24.5 target. AMC, as long as they're above 3.04, we're looking for essentially 3.16. DJT is trying to uptrend. We want to see if this could retest 21.36, kind of flat right now. The VIX is at support around this 19.5 area. We got to see if that holds. If that holds, this could bounce. That would be bearish for the markets. If this rejects and we don't hold 19.5, we're going to be looking for a dump in the VIX to about 18. The 18s are going to be coming, and that would be a bullish for the stock market. The 10-year is coming down amidst the fact that the Fed is going to be cutting more than expected previously, and the dollar is kind of flat right here, so we'll just have to see if this rejects or not. So far, it's rejecting off our 50, so it could be dipping back down towards 103.25, and eventually the low 103s. So what is my view, guys? Really, guys, you get a 2-day reaction from Powell typically, so we are going to be looking for a huge FOMC reaction. This may even help the market push more, but keep in mind that the reaction may be multiple days, and we don't always know what's going to happen. The charts do look more bullish, at least technically speaking, off these inverse head and shoulders that are everywhere, and the fact that we're building strength, but we haven't broken resistance yet. So watch for confirmation going into tomorrow. I'll be back tomorrow before the market opens with another update. Until then, have a good day, guys, and just know the charts do favor upside, but we'll see if this happens depending on what Jerome Powell has said and what the reaction truly is tomorrow. Okay, have a good one, guys, and peace out.